Hey y'all, welcome to the Elite Investor Podcast. Today we got a special guest, my mentor and one of the top multifamily investors, Mike Morawski.
Hey Ace, how you doing?
I'm doing well. I'm doing
Thanks
well.
for having me on.
I'm happy to have you, man. I appreciate you hopping on with us today.
You bet.
The first thing I want to start off with is kind of your backstory, like where you from, your foundation, and how you built your business. Would you start us off? Just kind of give us
Yeah.
a little bit about yourself.
Yeah, so where I'm from, I lived in Chicago forever. And I moved to Southern California about 2 years ago. And, my background was being in the construction industry. And then I went in real estate and been in real estate for over 30 years. Absolutely love it, especially the apartment business. It's in my blood, part of my DNA.
I love that. I love that. So tell us a little bit about your childhood. Like where were you growing up? You grew up in Chicago mainly?
Yeah, south suburbs of Chicago.
Okay.
So I'm a White Sox fan and
I like it. Yeah,
live,
White Sox.
yeah.
We like the Dodgers over here, but
Well,
yeah.
listen, Dodgers is my second team, so
Okay, good, good. Okay, perfect. Yeah. So I mean, starting off with, did you always have the goal to become a real estate investor, or did you have some type of aspirations before?
yeah, not really. I didn't grow up in a household that was an entrepreneurial household. I didn't grow up in a household that did real estate. My dad drove a truck and told me to go do better than him. And so I never really knew what I wanted to do. Uh, to high school, graduated high school. I actually, had a scholarship to go to Arizona to play football
Okay.
and got hurt. And so that didn't pan out and wound up not going to school and went in the construction business. I went to work for a couple of people. I went and learned how to be a framing contractor or framing carpenter and read blueprints. And from there, I built a general contracting business where we were building about 25 room additions a year, residential room additions.
Okay, wow, that kind of relates a lot to
Yeah.
football for sure. I used to play for UNLV. I played for Arizona for my freshman year, and then
Did you really?
I ended up going to UNLV
Yeah.
playing football. I tore my ACL, and then I was out of there, and it kind of just from there it was just all entrepreneurship. Once I graduated college, that's awesome though. So I didn't know that about you,
Yeah.
but the
Got
football
hurt.
story,
Yeah.
yeah.
So you can
Okay,
relate to getting
yeah,
hurt
for
for
sure.
sure.
It changed your mindset for sure. What did you always have that entrepreneur spirit? Did you always or what kind of background did you have that
Yeah.
got you into that?
So, couple quick stories. So, how did I get in real estate? I'm not really sure, right? But I remember being a kid and, I was on family vacation and I was sitting on the side of a swimming pool and I was probably 8 or 9 years old. And I remember asking my dad, I said, "Hey, how come all the rooms around, we were at a resort and all the rooms around the pool?" And he said, "Oh, people come here and they pay the owner money
Mhm.
to stay here." He goes, "Kind of like we are on vacation." I said, "God, I want to be the owner, you know?" And
Yeah.
I think that always stuck with me. And so I, went in the construction business. I worked for a couple of guys and I worked for this guy. And one day I kind of realized, I said, what he does as a business owner, I think I could do better. And I just opened up my own construction business and started out in the swimming pool business, which is a tough business in the Chicago market, but we
Mhm.
were building swimming pools and went from that. I realized I couldn't keep guys working all year round. So I'd hire guys in the spring, I'd train them, put them on unemployment in the winter, and they wouldn't come back. So then was in this cycle of training people over and over again, realizing how much money it was costing me to do that, and decided, you know what, I need to do something else. So I said, let me go in the kitchen and bath remodeling business. I hired a couple of carpenters that kept these guys busy then all year long. Before I knew it, I was building, 25 room additions a year.
Wow.
And the funny thing is, as an entrepreneur, you do everything.
Mhm.
You go on sales calls, you do the marketing, you hire people, you fire people, you do the bookkeeping, and you're still typically in the field banging nails.
All
And
right.
that's what I was doing. And I burned out. And I woke up one morning, and I just said, I'm done. I can't do this anymore. And I was fortunate I had somebody knocking at my door to buy my business. So I sold my business and I thought I was going to take a year off, which I didn't. As an entrepreneur, I don't
Yeah.
think you can ever take time off,
Not at
right?
all. You could just feel
So,
the guilt and building up inside.
right, right. I got
Just
to
get
keep
back
going, got
to
to
it.
keep
Yeah.
going. So I wound up buying a couple of two flats in Chicago and rehabbing them. And along the way, I met a real estate agent who was really successful. And I liked his model and how he built his business. And back then, this is in the, late 80s, and he was selling, probably 150 to 200 houses a year, which was unheard of. And I went to him and I said, hey, would you teach me what to do? And he said, I'll do better than that. He said, I'll make you a cassette tape. And I think I date myself when I say that about, because I don't think you can find
Cassette
anything to
tape.
make a cassette tape on today.
A lot of people don't know what that is,
Yeah,
but
right.
it's the little square thing that people stick into the radio. So
Yeah, right. So he made me this cassette tape and I listened to it over and over and over again. And it's kind of like a podcast, right? We listen to these podcasts today, and I may give a couple golden nuggets today that somebody wants to rewind and go listen to again. And that's what I did with this tape. So I went into the real estate business, and my first 9 months, I sold 78 houses. I was Remax Rookie of the Year that year. I went on to build a team. We sold about 125, 130 houses a year for about 12 years consecutively. And then in 2005, I saw the market starting to shift, and I knew I had to go do something different. So I decided to go into the apartment business. Now, Ace, I didn't just wake up one morning and say, hey, I'm going in the apartment business.
right.
It was something I thought about for a long time. I had done a lot of work when I was in the construction business for a couple of other apartment syndicators in the Chicago market. And syndication is just a fancy word for saying, hey, we bring a big group of people together to buy this asset,
Right.
right? People partner together. And so I understood the model, and I understood you take private equity, you put money in a deal. I find a great real estate deal. I marry the two together. I stay in the middle and everybody makes money
Right.
as long as everything goes well.
Would you recommend someone that's just getting started hop into multifamily, or do they need to have some type of due diligence in other industries or other asset classes when it comes to real estate, single family homes?
Yeah, so I'm a little different person. I'm a go-getter, and if I decide I want to go do something, I'm going to go do it, no matter what it is. And there's people in my life that'll tell you that's what I do,
Go
right?
big or go home.
Yeah. But if I had it to do all over again, I would have went right in the apartment business from day one. And I probably would have went in as a broker or as an agent and selling multifamily, but I don't know if I would have went to the investment side. I took that leap. I went into the multifamily investment business, but I had all this background in the residential market, right?
Right.
And I thought it would be an easy transition, and it wasn't.
Awakening.
The first time somebody
Different
said
ballgame.
NOI or cap rate, I was like,
It's a
what
different
the
language.
hell are you
Yeah.
talking about? So I had this whole new thing to learn, right? If I had to do all over again, I would have got a coach right from the beginning, and I would have went into the apartment business. So.
Yeah, how important is it to have a mentor or a coach? And I know a lot of people try to do it on their own, and that's where you start running into the trials and the errors and bumping your head. And you could skip that part if you just had somebody that was experienced that had already made those errors prior to, you know what I mean, prior to you getting
Right.
into it. They had already been there and they've done that. How
Yeah.
important is that?
Well, first, I think it's better to have a coach who's made mistakes
Yeah.
than somebody who hasn't made mistakes. Because there's a lot of people coaching today that have only been in the business 2 or 3 years and they had the wind at their back. Remember, there's no geniuses in this business. There's only market cycles. And you get in at the right time, and that market cycle, you have the wind at your back, it's going to help your business grow. And if you have somebody who's had nothing but success and hasn't experienced pain or mistakes, I don't know how much they can really teach you or help you.
Yeah.
So like myself, I built a $100 million company, and I did that in 30 months, and I lost everything during the 2008, economic crisis.
Yeah, because anybody can show you they wins, but what do you do when
Right.
you break down? Somebody got to be able to teach you how to cope during
Right.
those hard times, because
Right.
that's when a lot of businesses die in the first place, is when it gets hard, when things
Yeah.
get rough. And if you don't have someone that's been there and done that, that's felt that pain, and can tell you to keep pushing through that threshold, then usually that's when people go into different careers or lose it all. So,
Right.
what was one of the biggest obstacles you faced in your career?
Well, one of the biggest obstacles I ever faced was losing everything and going to federal prison for 10 years.
Okay, tell us about that.
That was definitely a big obstacle. So I went in the apartment business in 2005. And, I'm the kind of guy, I put my head down and I run for it. And so I built $100 million company over 30 months. And I always tell people, I say I made 5 mistakes. Mistake one was that I grew way too fast as a business, and I didn't take time to stabilize my assets along the way.
So he wasn't El Chapo of the real estate game.
No, not at all.
All
No.
right, you be safe to say
Yeah.
that.
I was over leveraged. So we
Gotcha.
bought $60 million worth of real estate because we own 4,000 apartments in 5 US markets. It was about $60 million worth of real estate, but we bought it on leverage because you buy real estate on leverage.
Yeah.
Leverage is your friend.
Right.
And we were at 85% loan to value. And I coach people today and I teach them that you should only be at 65% because then you have that equity tranche in your deal if something goes wrong. And the market shifted. And when the market shifted, because we were so over leveraged, we couldn't keep occupancy up. So that our payments and our bills were way too high. Next mistake I made was that I didn't pay attention to details. And I really feel that these deals are made and broken at the asset management level today in the environment we're in. And if you're not paying attention to all the details, the financials and operations, that's where a lot of problems happen today. So you have to be aware of that. Like I have an asset management checklist that every week we're on the phone with our property management team, our boots on the ground, and we go through 13 or 15 points, everything from occupancy to net cash flow. And we want to know where the property is from week to week and month to month.
Right.
So you have to pay attention to that. And then the fourth mistake that we made was I was undercapitalized as a business owner. So I didn't have enough money to grow my business at the rate I was growing it. I had 100 employees working for me. And, it's kind of hard to meet payroll week to week.
Right. And these are mistakes that anybody can make in any business, just over leveraging, having too much on your plate and just losing track of the numbers and losing track of your business. And I think that's very understandable. Man, I've been there and done that as well in different businesses, and it's definitely easy mistakes. So what would you say a person could do to avoid that, like avoid going through those same issues and obstacles?
Well, if you're buying an asset, buy the asset and stabilize it. Work on getting it stabilized. Don't rush to buy the next one, right? Make sure that asset is stabilized and that your investor returns are starting to happen. Then go buy the next one. This business is a marathon. It's not a sprint, right?
100%.
We don't have to run to the finish line. Just, systematically. And I bought 4,000 apartments in 30 months in 5 markets around the US because at that time in that environment, people were throwing money at you. Banks were giving you money. Investors were investing money in deals because the market was doing this. It was doing a hockey stick straight up. And that's, that was probably one of the biggest issues. I believed I had a team behind me that was stabilizing assets, making sure that, CapEx construction was being done and rents were being increased, and that wasn't happening. And then on me, I wasn't paying attention to the details, right? I should have been watching that more, and I wasn't, right? Because I thought that I had a partner who was handling all that.
Right.
And it didn't work out that way. And so today we're more systematic, right? We pay more attention to the details. We're slower in our growth. We buy less units in a longer period of time, making sure that we get those assets stabilized.
I love that. Okay, and then where do you guys see you got your growth now, as far as in the real estate business? Are you guys sticking to multifamily? Are you going diversifying into different asset classes?
It's a great question. Primarily I'm a multifamily investor. And in multifamily, there's a lot of different assets, right? You have self-storage, you have senior living, you have tax credit deals, bond deals. I like market rate rent multifamily. I like to be able to go in, do a repair, and raise my rent because I added value. One of my missions in life is to provide safe and secure housing for my tenants. And make sure that when, somebody who's at work and their kid comes home from work and that door closes behind them, that they're not being chased down the hall by a gangbanger, somebody causing a problem, right?
Right.
But we also do some light industrial projects. So we will go buy a light manufacturing facility, a warehouse distribution center, and we will buy, something that's maybe 50 to 125,000 square feet. and then we'll go in and put solar on it. And by
Okay.
putting solar on the building, we become the energy provider, which creates more cash flow to the deal, which enhances the returns and the yields for the investor, where the investor can make more money on their equity and make more cash flow. So what I try to provide in our assets for our investors is we provide preservation of capital, because you become an investor in the LLC. The LLC buys the real estate. You're invested in that real estate. We provide cash flow through a preferred return that comes in. You pay your rents, come in, you pay your bills, pay your debt service. What's left over, you pay your investors. And then equity, generational wealth. What are we building wealth-wise for our future, for retirement, for generations to come? And then tax planning. All of our deals are loaded with tax benefits, where that actually helps put more capital into the investor's pocket on an annual basis as well.
I love that. That's real. So what would you say to someone that's invested in other asset classes like stocks and bonds and crypto? Why should they invest in multifamily? What's the benefits of that?
So, traditional stocks and bonds, I think there's a place in everybody's portfolio for them,
Right.
right? Allocate them wisely. Real estate, gas and oil, alternative investments, crypto, alternative investments, allocate them wisely.
Right.
I'm a real estate guy. I've always had a heavy balance of real estate in my portfolio, and it's because I know what real estate will do long
Right.
term. If you look at some of the charts, you'll see stocks and bonds traditionally, trend at 7 to 8%. They do it over a 30-year period. Any 30-year trend that you look at, that's what you're going to see. Real estate, double digits.
Yeah.
And, so where do you want to spend your time? Yes, alternative investments are a little bit higher risk, but the yield is higher also. So it's
Right.
risk reward, right? It's that benefit that
Yeah,
you
the
get.
probabilities.
Yeah, right.
It's all statistics for sure. So tell us a little bit more how important pattern recognition is in the industry that we in now.
When you talk about pattern recognition, you mean systems you have in place or
Or systems that you
functionality?
have in place, and then being able to see the market move how it is. Because I know that you probably study the history of the
Yeah,
market, just and you see certain things repeat themselves. That way it kind of helps you react better to it versus
right.
like a lot of people are selling right now. A lot of people are going into foreclosure right now. They didn't really expect the market to or the loans to be called for a lot of the properties that's happening,
Right,
what's going on
right.
right now in the world. So how were you able to kind of um, beat that curve?
So you're talking about three different things right there,
Basically,
right?
all in one
So,
wrapped up.
loans being called, let me just cover that real quick.
Okay.
I'm a very fundamental investor. And when I invest, I want to invest and get up every day and know that my mortgage payment is the same,
Right.
right? So I'm a fixed rate investor. I want to go in, I want to get a fixed rate debt for 10 years and know that my mortgage payment is going to stay consistent. I think a lot of deals today that are being called because they were in a floating rate debt situation, or they did a buy down situation that they can't afford to keep that interest rate that they had bought down earlier
Right.
previously. And when the market changes and the feds raise interest rates, all the interest rates go up and your buy down rate goes up as well. And so now a buy down rate that maybe cost you $30,000 at the time of closing to buy points down 2 points on a 5% loan
Mhm.
today might cost you $300,000, and operators don't have that kind of cash flow in
Right.
their deal. So that's what's happening a lot in deals today. Operations is a big thing. The second thing you kind of talked about were markets,
Mhm.
right? And I'm a market-driven investor, and I have 8 or 9 points that I look at, starting with population growth, job growth, household income, and really one of the most key fundamentals for me is how many employers are in that
Right.
marketplace. If I have one or two employers in a marketplace, I've really seen markets change. Back in 2008, I owned about 1,800 units in the Ohio Valley. And in the Ohio Valley, what was really big there was distribution. You had DHL and UPS, major headquarters there. And you had auto parts manufacturing facilities. All these little companies that made knobs for radios, dashboards, beads for seats and the springs that go in car seats, and they sold those to major car manufacturers. Well, 2008, who got wiped out? Distribution in the auto industry.
Right.
And because of those two industries getting hurt, all those people got knocked out of jobs. And so occupancy in our apartments went from 90 percentile into the 60 percentile. Now you can't operate properly. So I want to be in a market where I have multiple employers.
Right.
So like we're heavily vested. We bought about 400 units last year in Tulsa, Oklahoma. And Tulsa, there's multiple employers. So you have aerodynamics, medical, manufacturing, education, retail, entertainment, distribution, technology, which is really big. And so I have 8 major manufacturing hubs or employers in that market. And so if entertainment gets hurt or distribution gets hurt, I still have other industries that I can rely on for my tenant base, right? And as a landlord, I'm not only an owner operator, but I have to operate as a landlord. As a landlord, how do I keep my occupancy up? Well, that's one of the key metrics that we look at. So those are some of the systems that we really pay attention to.
Speaking of technology, when AI comes, do you think that's going to affect the market as well?
Man, I love AI.
Yeah.
I love AI. A lot of people probably heard about Chat GPT, right?
Yeah.
I use it all the time. We use it for, social media. We use it for writing, ad descriptions. And we use it today for, I had to write a legal document the other day for something that we were doing in one of our deals. And I went to Chat GPT and I typed in. Now, I've spent a lot of time over the last year teaching my AI who I am and what I do and what our business is and who we are. And I went to our system and I said, okay, here's the deal. Here's what we have going on. Here's what we need to accomplish. Here's how we need to address this. And it gave me a legal document and I'll tell you what it was. We were buying a deal and got into the deal, into the due diligence period, and said, uh-oh, it doesn't smell like it did 3 weeks ago. So we killed the deal and bailed on it. Well, meantime, we had opened it up for raising capital and we had some investors invest capital. So I went to those investors and I said, hey, look, we figured out this deal does not work.
Right.
We have an option for a deal for you. You could put your money into this property. Investors said, okay, I want to do that. So the easiest way to do that is to either send the money back to the investor, have them reinvest it. It's a lot of, craziness. Right. What we could do is we could just do an intercompany transfer, but they had to sign a document that releases them from that investment opportunity into this investment opportunity. Right. So ChatGPT wrote that legal document. And what it did in 3 minutes would have taken me a couple of hours.
Right.
So it's a time saver. It helps you. For a minute there, I couldn't even remember where we were going.
Yeah, no, I think that's huge. Though.
Yeah, it's huge. What I'm looking forward to is the ability for an AI product to come out that I could put a zip code into and say, tell me about this submarket. Because we all know markets
give somebody a good idea.
Hey, let me know. I'll beta test it for you.
Yeah.
But we have a market, right? Like if you look at Chicago's got 78 submarkets. Tampa, Florida's got 15 submarkets. So every market has submarkets. And, I want to be able to go to an AA product and put in the zip code and be able to get what that submarket, what the population growth is, the job growth, what are the projections for rent, what are the projections for occupancy. And I know that there's people out there working on a platform like that.
Yeah, so I definitely see the real estate industry evolving with AI for sure.
Doesn't mean it's going to eliminate jobs.
Right.
I think everybody's big fear is AI is going to eliminate jobs, but I think it's going to help jobs. And I think it's going to give somebody else a new job. I've had a research person working for me, and all she did was research taxes and, market statistics and rent growth and job growth. That research person now is going to have the ability to have more real-time data.
Right.
without as much time invested.
I love that. Yeah.
Yeah.
It's definitely a growing market for sure. AI, boom. So don't be too afraid. It's definitely
Don't be
it's gonna
afraid.
be a tool versus a weapon against you, for sure. But no, I definitely appreciate you coming on. Last, I want you to leave us with something you would told your younger self, something for the viewers. Any quotes or anything that
Yeah.
you resonate with?
Well, I'll talk about a book real quick. I read a book over the last year by Tim Grover. And if you don't know Tim Grover, he's the personal coach for Michael Jordan, Kobe Bryant, LeBron James, and he was their mental coach, right? And he wrote a book called Winning. And that book has just been one of those books that I always refer back to because there's so many good quotes in it and so many things in it that, we all need a good ass kicking once in a while. And that's what it has helped do. So I would recommend that as a book
Okay,
for people to read.
tell us a little bit about your book.
Yeah, thanks. Great segue, right? Yeah, I just came out with my third book. It's Multifamily Investment Secrets, Your Explosive Guide to Wealth in Multifamily Real Estate. Amazon bestseller. I'm going to give you a copy of it. But what it does is it walks people through investing in multifamily, how to get started, what to do, the fundamentals, a lot of things that we talked about today. If you're a passive investor, it's a great book to read because it'll teach you what to look for in a deal, what to look for in a sponsor, and somebody to partner with and invest money into. You can buy it on Amazon, or you can go to Multifamily Investment Secrets and get a copy there.
There you go. And then let us know how to follow you. How do we get in touch with you?
Yeah, so if you're anywhere on social media, you find me anywhere. So Instagram, Facebook, LinkedIn, TikTok. I am on any platform that you're on. Love for you to subscribe. Listen to my podcasts, Multifamily Unplugged, Insider Secrets, and then I do a Wednesday morning live called Mic Drop Show.
Okay.
Hence the name Mike, right?
I like it.
And that's a great show because I typically will answer 3 questions in the morning, or I'll have somebody on who is I always like to interview people smarter than me, right? Because I really believe it's the rooms we hang out in that make us who we are and better than who we are. Like this weekend, I'm going to an event, and I'm going to an event that, are guys that make 10 times the amount of money I make. And it's one of those, you have to put yourself in situations where people do more than you. And that's what I really enjoy doing. So
And that's why we started this podcast, is to get in the rooms with people with these type of minds, these types of stories, and be able to connect with people that are on that next level, so you can potentially be on that next level. So I appreciate you taking the time out today and giving us viewers some wisdom, for sure. Y'all definitely tap in, go follow my guy Mike, and let's get it.
Thanks, Ray.
Awesome, man.
Thanks, Ray.
Appreciate it, man.
Yeah.